Hi traders, this is Mikael Fukwe from beststrategiesfortrading.com. Today I'm going to prepare for European markets for the 11th of November 2013. I got three charts that I'm putting my eyes on. But first I'm going to tell you a little bit about what I'm looking at. First of all, I'm looking at only the European market at this moment, and I'm only looking at charts that have more than 10 million in daily average turnover for that particular stock. And what kind of system, what kind of strategy am I looking at? I'm looking at a contrarian method from price action. I can give you an example here from the SPY. It's the S&P 500 ETF tracking tracking ETF. And if we take a look here at the year 2000, we have a peak, and then the chart, the price coming up to that level again, 2007. And when it come up to that level, it bounce from that peak price, former peak price, and go down the opposite way. That's the contrarian strategy. It's work from a pullback. It could also come from a push-up when it bounced from a former trough, or it can also be used from, for example, trend lines. This could be a good example of trend lines where you connect several troughs, and then you can see what probably what a future bounce area will come from. You can also use price action from the 200 moving average. You have several good examples here in the SPY. Here is one example. Here's another example. Here's one example. Here's one example. Here's another example. When the price is coming rapidly towards the 200 moving average, that's the most used moving average in trading. Okay, enough speeching about what kind of method. We're going to start looking at the three charts that I have been scanning out with my algorithm for the European markets. Okay, this one is the first one. It's Tullow Oil from the London Stock Exchange, and I'm looking at this trough from 2011. Take a look at the monthly chart. It's easy to find the right level at 1879 and 50 cents. I'll make it 880. 880. That's my level for Tullow Oil for coming down to a resistant area for bouncing up. And also going to check if Tullow Oil TLW.L is going to have any earnings in the near future, because I don't want to take a trade one day and next day before the opening that particular stock has an earnings release, and I ended up having my stock 5-10% on the wrong side just on the opening. That's not a good way of trading. Okay, Tullow doesn't have any kind of earnings release in the next week or two. Next chart we're gonna look at is ING Group from the Amsterdam Stock Exchange, Nasdaq. We got this peak here from 2009. It's very close to 10 even number or symbolic number of 10. So I'm gonna put my resistance area at 10 exactly. ENG, has it any earnings? I know it actually had earnings coming up yes, the last week, so that particular stock is totally green for having trades at the moment. Okay, the last one is Philips, also the Amsterdam Stock Exchange, and I'm looking at this peak from 2010, high 027, 0050. I make it 27 even. That's my level for Phillips for a short sale. PHG, check for any earnings. No, not any earnings for PHG in the near future. Okay, and now we're back on the SPY again. So this is my level for the European market tomorrow, the 11th of November 2013. ENG 10, Phillips 27, both short sales, and Tullow Oil 880. I'm going to go long if that stock is coming down to that level. Okay, that's all for today. Remember, this is only my personal levels. This is any kind of advice. So if you trade, do it on your own discretion. Remember, any kind of trade with financial instrument is dangerous. It could be risky. So at least do not put any more money than you can afford to lose if you by chance do some kind of trade. Okay, thank you very much for your attention and happy trading.